Oh, good day, and thanks for your time. What I was looking to do today was spend a little bit of time talking about a company called Superloop. Superloop may be familiar if you're a client of the Morgan's network. It's a name that comes from the founder of many companies and we're all very familiar with. The company's come a long way in 3 years and we're getting quite a lot of questions about it because a lot appears to have changed at first glance. So what I really wanted to do today was spend a little bit of time reminding people of what the strategy is, what's unique about this business and why we like it. So probably the first point to start with is when Superloop listed on the stock market about 3 years ago, they always said the objective of the business was to provide connectivity in Asia. So specifically that is Singapore, Hong Kong and Australia. And we're listed on the stock market to get access to capital to fund the build or buying of those networks. And now 3 years later, we can say they've clearly achieved that goal. They've got some impressive networks in those 3 locations and the business has actually ticked that box and moved on. Now, if we step back and take a global view, the significance of the strategy of the business becomes a little bit more apparent. So you can look into regions like the USA and Europe, and you can look at companies like Zayo and AT&T, very successful telcos. And part of what's made them successful is their global coverage or the geographic coverage. So you can go to a company like that and get access across the whole of the USA or the whole of Europe. And that's been a very successful strategy. But in Asia, it hasn't worked because it's been very, very hard to do that. That is until Superloop came along. And as we just said, they've actually achieved their goal of providing connectivity into those 3 areas. And that was always the strategy. So the thing that has maybe changed since the IPO is the last mile connectivity. So it's always been about big cables, but now we're talking about how do we get the traffic onto those networks, onto those big cables. So the product range has changed. We do have a number of services now, including dark fiber, which is a DIY or bring your own device and manage it yourself. Managed services where Superloop will actually look after it for you. And of course, more recently, we've heard a lot about fixed wireless technology. At the end of the day, these are all just connectivity, last mile connectivity, driving traffic back onto the network. So that strategy really hasn't changed. What has changed, and I guess what's more important, is the cost to provide some of these last mile services. So you've got to look at clearly the revenue per service and the cost to provide service and the quality of the service. And significantly, in the last couple of years, the wireless technologies have got substantially better, and that's why this is becoming more and more a part of the business. But at the end of the day, they're all connectivity services driving traffic onto Superloop's network, and as you drive that traffic onto that core network, you increase the profits for shareholders. Now, one of the questions we keep getting asked quite a lot is, why are they in Australia? Why do you bother? It's a pretty tough landscape here. And yes, all of that is true, but it is important to point out that from the start, it's always been about Hong Kong, Singapore and Australia. So we're still sticking on the strategy here. But maybe just a bit of background. The reason Singapore and Hong Kong were invested in first was, if you look at the connections or the connectivity, you can actually sell the same service for multiples more in Singapore and Hong Kong. It costs the same amount to build, but you can sell it for a lot more. So therefore your return on capital in those locations is likely to be a lot better. In Australia, the price of these services has come down a long way. So the point was it wasn't really worth building or sinking the capital in Australia because you weren't going to get a good return on it. Those of you that have followed Bevan know that he's got a history of making some pretty impressive deals, and he did just that in Australia. What he actually did was bought capacity off an existing telco, which gave him coverage around Australia, and he bought that capacity for substantially less than it would have cost him to build it. So obviously selling for less, but building for less, the net result is you're able to get a good return on capital for that asset, and equally importantly, tick the box about enterprise connectivity in Australia, Singapore and Hong Kong. Now the last bit, or maybe the newest bit of the business, is really Superloop's entry into the Australian consumer market. Many people are wondering why, why bother? And I think that's a completely fair question. Something, I guess, a bit of perspective to bear in mind. If you look at the founder, Bevan Slattery, he's always been very vocal on the view that the NBN is a bad outcome for consumers. And we certainly share that view at Morgan's. We've got heaps of research you can refer to if you'd like more details, but we just don't think it stacks up. But Bevan, being an entrepreneur, has clearly decided to turn this from a problem into an opportunity. And using wireless for the last mile is that real opportunity there, which again drives traffic back onto the core network. I think what's significant is, why are we doing this now? Why are they doing wireless for consumers in Australia now? And there's 3 key reasons in my mind why. Firstly, the quality of these wireless connections has got a lot better, so the end customer is going to be happier with the quality of service. Secondly, the cost has come down, so you get the right equation in terms of investment, capital returns. And then thirdly, and probably most significantly, about mid last year, the federal government said, we're not going to put a tax on wireless technologies that compete directly with the national broadband network. So that was really the green light you needed, because there was no point investing the money if it was going to get taxed and the returns get withered away. Got the green light from the government to proceed with this wireless technology, so Superloop and others are doing the same thing. Now, without giving away their secret sauce, the maths is that you're much better off economically providing a last mile consumer service on a wireless connection than you are on the NBN. And you can look in many, many instances around the world and see that last mile wireless is gaining significant traction. So what Superloop can now provide is a higher quality network at a lower price. So at the same time, they're putting more and more traffic on their backbone network, they're making more money for shareholders, and equally importantly, they're making life better for consumers. So it is actually a good outcome for everyone. If we circle back to that Australian business, I think it's also worth pointing out two things. Firstly, the capital requirements to do this are not substantial. Superloop have already built the core network, or most of the core network that this plugs back into. So we're not talking about tens of millions of dollars being outlaid. There's a relatively small capital spend to service an area. So that's the first point. And the second point is that those of you that know Bevan will know he's not run a consumer business before. He's always been business-to-business telco. But Michael Malone, who is the chairman of Superloop, is also the founder of a company you may have heard of called IONET, which was one of Australia's most successful consumer or residential ISPs. It grew from 0 market share to 15% of the market, millions of customers, before finally being taken over for billions of dollars by TPG Telecom. So you do have within Superloop, you've got the network and the equipment you need. And then on the second side, you've actually got the experience, which means rolling out a residential offering using wireless last mile in select areas is a relatively small bet for this business, but it looks like a pretty good risk-reward trade-off indeed. So that is Superloop in a nutshell. They are the only single provider of connectivity across Singapore, Hong Kong and Australia, obviously with the exception of the consumer offering. The strategy is unchanged. It's all about building competitive advantage and driving traffic onto their network. You can look now, we've been in Singapore for a couple of years and live in Hong Kong for about a year. You can look at both of those networks, and I'd encourage you to have a look at our note that goes through the progress there. I think they have made very significant progress. They've built what they said they would. They've started monetising that. We can see the progress improving, but ultimately the business is going from strength to strength there, and it comes down to driving traffic and continuing to monetise that. If we look to Australia, we just want to point out two things. Firstly, the big focus is really on integrating the Big Air acquisition. And then secondly, that consumer offering we think is a relatively small bet for this business. If we just circle back to the Big Air integration for a second, I do just want to point out that it has been a lot harder than was expected. Superloop are running duplicate teams, so a legacy team and a new sort of more efficient team, which means you've got duplicate costs coming through at the moment. There's a lot of integration work that's been required to get this business shipshape. So, unfortunately in the short term, that's a headwind and certainly a fair amount of costs associated with that. But the flip side of this is also, if you take a medium-term view, which is what you should be doing, then there's probably a lot more costs and efficiencies they can drive out of this business going forward. So we do think that right now it's a bit of a challenge, but in the medium term, it really is a big opportunity. And we certainly think there's more upside than downside from here. And finally, just concluding on our investment view, just want to point out, as many of you will know, markets are very impatient at times, and that does really create an opportunity for those that are investing for the long term. And if you look at the history of this business, the founder, Bevan Slattery, and the chairman, Michael Malone, both have a significant history of creating a lot of value for shareholders and themselves over time. And we think they've got all the necessary ingredients here. I'd say probably one of the main hindrances for this business has been expectations. When you've got some very successful people involved, people's expectations naturally get elevated. In the real world, things do take time. And you can look and you can see they have achieved what they expected, and they have achieved some very significant progress, but it just does take time to build businesses. And that obviously gets you to the share price. The share price has come off quite a fair amount over the last 12 months in particular. I think it's interesting to point out that Superloop's trading right now at about a 20% premium to book value, which is not a lot. Some people look at earnings multiples. This is really an asset play, so I think it's good to look at the price to book multiple, and that gives you a line in the sand that to me suggests there's not a lot of downside from current levels. And certainly as those returns on capital start to improve and we get up into the mid-20s, there's lots of upside multiples from the current share price. So we do think the risk reward is very attractive right now for those taking a medium-term view, and we certainly encourage you to have another look at Superloop. Thank you.